Hello everyone, today is Friday, June 23rd, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 687, where we break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. We're going to jump right into it today with the takeaways we're going to be discussing throughout this video. We got the largest down week in 3 months for US stocks. Sounds bad, sounds extreme. It really wasn't. It was frankly much needed. And I would even dare say healthy for the market to finally kind of pull back and just take out a little bit of the froth that we've been seeing out here over the past few months. It was a mild week. By any metric, we're still in uptrends. We're still holding above key moving averages. We're still above most trend lines, however you want to define all of that. So this was a down week, but it just really goes to show you how strong things have really been out there. Now, on the flip side, something that is more concerning is bullet point 2 here, which is the 10-2 spread, and that continues to widen. In fact, it hit I believe it hit new extremes. If not, it's close to what we've seen over the past few years here. This is commonly used as sort of a recessionary indicator here, forecaster of recessions, and just generally speaks to, you know, kind of this uncertain, more macro environment that we've been in. And now if you want to take the other side of it, you've got the VIX hitting a 12 handle earlier in the week. I think it ended up closing at 13, north of 13, but you've got just this kind of yin and yang market, so to speak, between price and perhaps even sentiment, and then just some of the macro kind of doom and gloom that still exists and kind of looms out there. Flipping gears entirely, Bitcoin. We don't really talk too much on crypto on this show, but jumping pretty big here this past week on you know, potentially an ETF approval, or at least just more kind of renewed interest there, and even some suggestions that we could finally get it done this time. And sticking with that commodities theme, natural gas rounding up from bit of a bottoming pattern it's been trying to form over the past couple of months. So that's what's on tap for this week's video. We're going to jump right into it in a second. All right, here we go. Jumping into the data, the numbers, the charts. We've got TC2000 open, and we're going to run through our list here. So top of the stack is just the general performance here on the US indices side. So if you follow my mouse, you can see 1 week returns, all negative this week. Biggest losses coming internationally. So outside the United States, ACWX was down 3.5%, pretty big week. It's now negative on the 1 month returns. But in second spot here, or biggest down for US indices, was that Russell 2000. Remember, Russell 2000 had that big shot of life here about a month ago, and it's slowly been kind of giving some of that and retracing some of those gains back. We're going to talk about that chart a little bit later in the video. Nasdaq was down 1.29%, S&P down 1.39%. All the while, if we go down here to our volatility regime here, you can see that Nasdaq vol and S&P vol both fell this week. So even though markets pulled back this week 1 to 2%, we actually saw volatility indices pull back as well. And if we look here across our different line charts, you can see all of the markets basically started in the top left this week and treaded down to the bottom right. Most notably here was the Russell 2000, which was in pretty much a firm downtrend throughout the course of this week. Each of these charts are just the week's time. So basically 5 days worth of trading across all of them. We've got our line chart, our support and resistance indicator drawn on here, which is built for TC2000. So let's go to the sector view and let's take a little bit closer of a view underneath the hood. You can see every single sector on the week was in the red. Healthcare was at the top, discretionary and communication services were the top 3 or relative strength performers here, but they were still down slightly to 1% on the week. The biggest hit though was real estate. Real estate was down almost 5% this week, followed by energy and utilities down 3 to 5%. So they were definitely the laggards here. And coincidentally, they are almost the only 3 sectors here that are red over the past 1 month. We still have consumer discretionary and technology, which are the biggest 1 month winners here, or leaders in this market. If we take a look at our smart trend filters here, so You can see a number of sectors, including technology, starting to transition into what we call that neutral state, the yellow dot getting printed here. So you can see basically just a little bit of weakness kind of creeping in. And again, it's not a, run for the hills type of risk, or at least not yet, that we're seeing across here. But we've had a heck of a run to the upside, and we just have to keep in context of where we've come from over the past couple of months, and it's basically been straight up. So a little bit of a pullback here, even another week or two would be, in my mind, still healthy, but you can see a lot of these transitions going down into the neutral state, materials as well, real estate this week, so on and so forth. So that's kind of the the sector look here. And if we take a look under the hood at market breadth, you can see again just more of that weakness creeping in. If we look at our market gauge dials here on the right hand side, pretty much everything was in the lower territory here, or the lower percentile rank, which is basically looking at number of stocks up this week. As you would imagine, indices down, most stocks were down this week as well. Not many stocks finishing higher on above average volume, so that all kind of plays into what you'd expect. The one thing I do want to draw your attention to is the lower pane here. Let me expand this. We just want to keep an eye on this. So this is looking and tracking the number of stocks, NYSE stocks at 52-week highs and lows. And so now you're starting to see this little bit of a spike up here in this chart here, in the underneath the hood of the number of stocks hitting 52-week lows. So you just don't want to see that continue and expand next week. You want to see this kind of flattening out and treading back down. You want to see more green shoots here than you do on the red side. So let's keep an eye on that. A little bit of a uptick here makes some sense given the pullback, but you just don't want to see it get too carried away. You want to see the bulls remain in control if you want to continue to believe in this market rally. Now, if we take a look here at commodities, so you can see basically commodities here were mostly red, but natural gas standing out here. So at the top of the list, 5% on the week to the upside here for natty gas. The dollar was up pretty strong. Dollar index was up 71 basis points this week. And then you had gold down almost 2%, agriculture down almost 2%, oil down 3%, silver down 7%. So you really got hit pretty hard here in the commodity space outside of natural gas. Notice on natural gas as well, our smart trend filter. So it turned up on Friday of last week, got a green dot printed, and it continues to work itself higher. So complicated kind of bottoming process there. We'll talk about that in just a second. And everything else though, even though DBA, which is our agriculture ETF here, was down 2% this week, it's still showing, some pretty good strength here, as it's had a really nice run as the dollar has, was weak over the past few weeks, and that tends to fuel and help commodities largely. Next up, I wanted to jump over to IBD. So shout out to IBD. They're a sponsor of the show. And what I did this week was look at the top 10 on their IBD 50 list. So I took the top 10 stocks on that list currently, and I threw it in here, and just to take a look at the weekly performance for sort of the more growth type of names here that they usually curate on that IBD 50. And you can actually see it was a pretty resilient week here for this group of stocks. You had Elf at the top of the list, which has just been this beauty company that's been just on an absolute tear to the upside throughout the course of this week. You can see 4% on the week. Celsius Holdings, right down the list here, is pretty constructive outside of Samsara IoT, which was down 10%. If you take that out, it was basically all flat to some good outperformance here for growth stocks, or what I'm going to call growth stocks. They're not all the nosebleed kind of profitless growth stocks. Some of them are real business models with some cash flow, but you get the point here. And you can see on the 1 month numbers, these are all up pretty good double digits for the most part. Look at the 1 year numbers. This is actually what stood out to me when I threw this list on here. I couldn't believe, you got 300 and 160% off the lows. That goes to show you how much we've seen of a rally here and a change in sentiment off of those lows from past years. So shout out to IBD. They're a sponsor of the show. This comes from their IBD digital product. So if you want to get access to that, there's a link in the description. section, you can curate the IBD 50 and along with a bunch of other lists there that they update on a weekly basis. So moving along here, if we look at Treasury yields this week, not too much to say. It was pretty flat. I mean, you're looking here at essentially price action for yields over the past 9 months or so, and you can see we're just stuck in this big broad range across really the curve. And if you look at the bottom right here, though, this is the move index. So it's basically the VIX for Treasury yields or fixed income, and you can see it is trending lower here, which is generally speaking a good thing for bonds, for bond prices. So we'll see if that takes hold. But right now going into next week anyway, not a big change in terms of expectations here or Treasury yields. So let's get into some price action now. Let's take a look at the S&P 500, where we always like to kind of start things off. And we talked about this chart over the past handful of weeks. We've just been breaking through in pretty orderly fashion all of these resistance areas to the upside. And the biggest level that we just kind of left in the dust here was around this 4280, 4300 zone. And again, you can see we kind of shot above it and really, kind of only leaving us with around 4600, which was the old 2022 highs here from February and March, as our next big destination on this ascent higher. But as you can see, a little bit of turbulence, a little bit of check back, an inside week, as they would call it in the technical wheelhouse here. And you can see that, we've got about 4 or 5 days of just pulling back here. We had that nice run, big move up on that last Thursday, the 15th, when S&P was up 1.2%. And then, Friday, we started to put in a little bit of a reversal. So remember, it was a short week this week, with Monday being the holiday. So we only had 4 days of trading here, but you can see mostly all sliding back. And when I look at this picture here, I would love to see a retest of this 4,300 zone. I wouldn't mind seeing this consolidation continue another 1% down here and just see if this is for real. Let's see if we can sustain this breakout. And I think that would be a really good test for the market and a good test for the bulls right here. And I think it would be healthy if we came back down and just confirm that buyers are going to step in here, that the breakout's for real, and then ideally kind of find some support and lift up here. Maybe we enter a little bit of a choppy range for the summertime. Let's call it between 4,300 and the highs here around 4,450, 150 point range. Let's move sideways. Let's consolidate before we make potentially a big run towards this 4,600 zone, or dare I even say the all-time highs, or roll back over, right? I mean, that'll be the big test here as we move along the summertime. But for now, we're in pullback mode. Let's see how quickly dip buyers come back to this market. Now, if we take a look at the Qs, you can see here kind of similar behavior. I mean, just a week of pulling back. We've had a nice run to the upside. If we zoom out here, we already had tested, we got there last week. We basically got up to the early June 2022 highs, and you can see we kind of failed right there. We rejected that 370 zone, and we've pulled back slightly. Looks pretty orderly, looks pretty healthy, but I'd love to see even more digestion here. We've got some very stretched stocks. I'd love to see leadership kind of change hands, breadth to expand, and that's what I'm going to be looking for over the next couple of weeks. And if we go to the Russell 2000, this is the spot where we are losing a bit more steam than I would prefer here. So again, for Russell, I mean, sure, I wouldn't mind a retest of this 178 area. This was the big breakout zone from just a couple of weeks ago. I don't really like the big uptick in volume here on Friday. I know we had a little bit of an option expiration as well, but big uptick in volume, this kind of gap down. This isn't the most desirable way to come back and retest. I really like, say the Qs, right? This looks more orderly to me, kind of below average volume, kind of trickle lower. You don't want to come slamming back down. You don't want to see it with a bunch of violent gaps. So Russell 2000, we'll see how this one shakes out. Still definitely the weakest here, but above, 178 or so is really where you want to see this thing stay if you want to keep a very optimistic kind of breadth expansion going in this market rally. So that's kind of the way I see things. Still looks like it's the bulls environment here. There's some warning signs. There's a little bit of perhaps froth still that we need to unwind, but generally speaking, bulls remain in control of this market. So we'll see how that progresses. Let's take a look at volatility itself. So S&P vol, so VIX, look at this, down at 12. It has been a long time. So let's see how far that is. That's multiple years since we've seen basically, yeah, pre-pandemic. So going back to 2020 was the last time we saw VIX down at these levels. Pretty impressive slide down here. We'll see, again, a little bit of a turnaround here going into the weekend, but still very, very subdued and low volatility levels. If we take a look at the dollar here, you can see on its weekly basis, got a nice pop to the upside here, 0.71% for the dollar index. Still broadly going sideways here, not big changes from the bigger technical picture. Gold this week as well was down 1.89%, so finally kind of broke down from this range. We were eyeing this over here, and we ended up resolving it lower. We tried to get going on Friday, but kind of gapped up and then sold off for the rest of the day. So not too inspiring here for GLD. I'd love to see this back over 180. Over 180, I like gold again. Below 180, I don't know. I wouldn't really be paying too much attention to it. There's some gaps back here, but let's see how this progresses. Silver, like we talked about at the top, was down pretty hard this week, 7.21%. And again, just doing a little bit more technical damage there as well. Last but not least, let's see if I can pick up a Bitcoin chart here. TC2000 is a little bit tough. I can pull this index up. So yeah, this is the weekly chart of Bitcoin here. You can see that we've basically each bar is a week of trading. And so you can see for the past really since mid-April, we've been pulling back and just retracing. We got down to sub 25,000, and then take a look at this week here, up about 18%, back up above 30K, and almost at new 52-week highs here. So very impressive move there. Congrats to the crypto bulls on that one. Oh, and natural gas. Let's talk about natural gas. Look at this here, really rounding out this bottom here, weekly chart for natural gas. You can see moving back up. This one's violent. You got to be careful trading this. It's just all over the place. And right now, though, the bulls certainly, getting that move back up the right side of this consolidation. If you start breaking over 770 or so for the UNG ETF, you could really kind of squeeze there and make some moves up. So let's pay attention to that, as most people are kind of forgetting about good old UNG. Now, last but not least, I wanted to finish off with some IPOs, and we never talk about IPOs, but I just released a new IPO layout on our website. So for you TC2000 users, this is a layout dedicated to trading IPO stocks. It's really cool because it's hard to curate the list of active IPOs out there. And so we've got this new layout, which basically from the day they start trading, they're going to show up in this list for you. So you get to see these kind of new stocks hitting the secondary market, participate in price discovery, and catch those explosive moves. And so because this just went up, I wanted to show a few IPO stocks here that are breaking to new, starting to clear some recent highs here. And so you can see Atmos. I have no idea what these companies do. I'm going to be 100% honest here. I have no idea what they do, but you got new kind of all-time closing highs here. You can see, again, this has only been trading for the past 18 days or 1 month of trading. So very limited price history. MGOL, you can see has been around a little bit longer since the beginning of this year, but you're really starting to see some huge volume here. Look at this move. Look at this single day. This was 84% in a single day. So again, risk, be careful, position size. This went from $1.28 all the way up to $2.30 on just ridiculous volume. And it's still kind of just trying to march higher here. SKWD is trying to break out here as well. ETAO, nice move here on Friday. Again, no idea what this stock is. It's a penny stock. Be cautious here. $3.36 for Toro, trying to move up here, shipping company. MGRX, medical care, trying to work itself up here. KVUE, rounding up, kind of moving up. BANL, trying to clear. Oil and gas, trying to round out and clear up. HLP, Diversified Industries. Some of these are a little bit on the light volume side as well. HSHP, new all-time highs here for this stock that's only been trading for 2 months. UCAR, UCAR, U-Power Limited, not familiar with this company either, but been trading some big volume recently. Again, 48% day. Such huge moves here in some of these companies. And last but not least, VCIG, Aerospace and Defense, big volume coming in about last week or so. Look at this move, 156% in a single day. Yeah, you got to be careful with some of these names, but certainly if you want that explosive move, IPO stocks like some of these are certainly the place to fish in. And that's why we created the layout, got a handful of different watch list depending on the time frame preference you're interested in. So check it out there if you're a TC2000 user. So a little bit different, and figured I would highlight that. Also did a video on the channel yesterday with some trade ideas, just some bullish trade ideas from some of our scans. You can check that out as well if you're looking for more individual companies on the long side this weekend. So that's all I got for this week's video. Hopefully everybody's doing well out there. Summertime's here, good weather's here, and you know, hopefully you get some time to enjoy that. And you know, don't spend so much time glued to the markets, and these videos ideally will help you do that. So thanks so much for tuning in. Leave a comment below. Let me know what you're looking at this weekend, and hope to see you back here next Friday. Take care, and we'll see you then.